How's it going, everybody? It's the midweek update for the 21st of June. This month has been quick for me as the markets have been pretty diligent, pretty aggressive, pretty surgy. Is that a word? Surgy? It is now because they've been surging pretty aggressive. But we are getting that pullback that we've been anticipating, and so far it feels like a pullback. And I hate the word "feel" more than anything. But the way that I'm seeing this markets react is a little bit almost reluctant to pull back here. What do I mean? Well, we're going to get into it. Please give me your comments. Let's share as a class. Take responsibility for it. You guys get it. So Powell is addressing Congress. Tomorrow it's the Senate. Still talking about inflation, still a concern for the Fed, of course. They're going to stay a little bit more hawkish than I think the markets would like them to see. But hey, that's kind of your job. You need to make sure things are in check. Couple things that I thought were interesting as of late. Go down to the bottom, and we do have another housing number coming out, I believe tomorrow. We'll take a look at it here in a second. But an uptick in home builders' confidence and housing starts, also permits. So we'll see about existing home sales. That's something that I've talked about for quite a bit. We're seeing some heat in some areas that aren't really slowing down. Then we start to see some slowing. Finally, the services PMI comes back down. But right after that, or during the same time, we get a huge spike in home builders. Not the confidence is fine, that's one thing. But housing starts, permits, let's see what happens with existing home sales. So the gas is, the pedal's still down in my book. Now, another couple of articles I came across that I thought were interesting last week is in our sentiment here. Some believe a recession's already passed. We have had 2 consecutive quarters of negative GDP. We have seen that flatten out and increase. Understand, the GDP isn't the problem. It's not a lower demand. What it is, it's a surge in inflation. It's the consumer needs to slow down to keep prices from continuing higher. So I think there's a confusion there when it says that inflation has peaked to say that, okay, it's stopped. That's not a recession. A recession is when people just flat out stop buying goods and services, businesses stop hiring and start closing things. That hasn't happened. Technically, 2 consecutive quarters of lower GDP has. So, technically, we've already gone through a recession. The markets have believed that we are no longer in a bear market. I think that was the end of last week, where we turned around and retraced that 10 or 15% above the low, creates the bottoming, quote unquote, end of bear market. All these things are really fun when it comes to statistics. It doesn't mean that it's really going to be impacted on what we're seeing in the markets. Based on what the markets are doing, absolutely. I mean, it feels that way, the way the markets are moving. So we're not going to get in front of that. We're not going to get in front of it. So let's continue with our recap here. The markets appear to be in a pullback mode for now. It's only been 2 days, came out of a holiday, and the pullbacks are pretty weak. We came well off of the bottom yesterday, and today looks like we're rolling over a little bit, but we'll see where we close. Got a big surge in crypto. Not sure. I don't follow it big enough, but it's almost doubled in the last 6 months. About 15K up to almost 30 now. So it's a pretty good surge, and it's been over the last couple of days. Not sure if it has anything to do with SEC investigations and all that fun stuff, but it's playing its own game. But the markets are taking a little bit of a breather here. So it's going to be very interesting to see where we go. All right, I've got... That's kind of where I'm going, and it's very difficult for 2 days, knowing that the markets are pulling back, to kind of make any heads or tails of what's going on the sentiment-wise, when it's behaving exactly what you'd like. I don't want to look too deep into it. So let's take a look at some of the trades that have been triggering over the last little bit here, guys. I'm going to go ahead and just jump on these live. So let's start with BKR. This is Baker Hughes. This was on a bear watch list from a week or so ago. I thought it'd be interesting to share, because it has a nice engulfing candlestick pattern. And I found it very interesting because it is in the energy sector. In fact, there's a couple of them. I think LNG is as well. So there are some outperformers out there when it comes to some of these sectors that quote-unquote should be weak or are showing signs of weakness or slowing. All sorts of fun stuff. I do like this engulfing candle today. It's a little bit volatile, so these could just roll over and give up, but I like the crossover. I do like how it stayed above that 29 area. It's right up against that 31. You can be patient with this. And target here at about 32, extended target about 33. Just depends on where you want to go with this. Now, I'm going to go ahead and kind of just give you guys my update on what I'm thinking when it comes to my outlook. In corrective markets, I don't want to play bear because of it's a corrective market. Also, in corrective markets, bears usually bounce, right? We don't want to get caught in the bulls are pulling back and the bears bounce. That's a corrective market. I found that sideways actually seems to do pretty good in corrective situations. Sideways to up with your bulls, sideways to down with your bears. You could be patient, wait for the correction to happen. Maybe the markets will start to continue higher or flatten out. And then you could resume more of a sideways to bearish exposure in some of those bearish trades. What I found through corrections, don't abandon bull trades. Sometimes it hurts. If the correction continues, it does hurt. But if you want to add new trades, make sure there's a sideways element to it over the correction. This could last 3 or 4 more days at the end of this week, or it could carry into next week. I don't know. But if anything turns around and just shoots straight up, if these bulls are really just they can't handle it anymore and they want to jump back in, and it shoots straight up, you'll be okay if you're in a diagonal. You'll be okay if you've got a broken wing butterfly. Anything that's going to skew to slightly a bias to the upside during corrections is usually okay. So keep that in mind as you guys are looking for some of these trades, or if you're trying to make a decisions between one or the other, you might want to float to something that's got a little bit more sideways exposure to it. Time frame wise, I don't want to get too aggressive. Just stay shorter term. I found it to work a little bit better than the longer term. It's nice to, I should say I'm okay with a trade running out of time and then just putting it back on, then seeing it hit your target and knowing that you're stuck in it for 2 more weeks. It's very frustrating. So just kind of float. How's that? Stay loose. Stay, what's that kind of the word I'm looking for? Stay quick. Yeah. All right, so LNG here. Another energy, so 2 in a row. This one is a little bit more of a corrective turn. It looks to me it's just broke. It's downtrend, right? Let's go ahead and see if I can't draw this. Here's a little downtrending channel. I'll do what I can. But it broke it a little while ago. The moving averages aren't quite where I'd like to see them, but it is showing promise as it moves through some of these resistance levels here at 150. Sideways for sure. This could immediately roll back over and retest the 140 area. Maybe 145 would be nice because that would show that it's setting higher highs. But don't be surprised if it does something like that. So something sideways. If you wanted to go longer term, I shouldn't say longer term, but if you wanted to play an energy recovery, this would be a pretty good start. And it looks like it's trying to do so. So there's many different opportunities out there. They're all going to have different outlooks. So don't get married to any specific blanket across everything, meaning everything in this sector is going to go bearish. Everything in this next sector is going to go bullish. No, there's a lot of exceptions out there. We're seeing a lot of pushing and pulling going on. And you guys have seen this even in some of the communication sectors. Well, how about AI or chip makers? NVIDIA is vastly different than what I'm seeing in AMD and in Intel. Right? They all are chip makers, but one is just a darling. The other 2 are very selective. So we are starting to play this game within a game, which is super annoying. We can't really just blanket bull, blanket bear. It's very selective. Corrections usually, well, it's in the word, correct this, if they correct long enough. I want to see some trades come out of some of the higher flyers. I want to see people pull profits off some of these extended flyers and put them into something else. Then we'll know that we got a rebalancing or a correction. Okay, that's a lot of talk there. Geez, Joe, let's get into some trades here. Here's Allstate Corporation. Interesting enough, guys, you saw my trade ideas. I've got 2 bulls, no sideways, 6 bears. 6 bears. So I'm just finding what I see in the trading. It's difficult to jump into these bears when the market's correct. This is Allstate. This was one that Corey was taking a look at, I believe, a couple of weeks ago. And it just popped back up because you got this beautiful rollover. Let me zoom in on it. So you got this beautiful rollover going on right through here. It breaks that $100. No, what is that? 108 support. But the shadow is reluctant. It hurts. I don't like shadows like that, especially on a day where the markets are moving down. It means that this isn't rolling over. It was earlier, but it's retraced quite a bit. So target about 105, 104. Something sideways to bearish. If you're worried about this continuation or it might flatten and it might do something like this again, well, that's why we have a sideways play to this as well. So something sideways to down or credit spreads. So there's Allstate. Let's move on to the next. Oh, there it is. Okay, so let's get going here. It's been a beautiful little stair step since it got very excited and expecting to do very well. Huge euphoric move to the upside, and it's been selling off nice and steady ever since. We talked about this 190 support that's actually slipped below. We got this target of 180. I talked about this yesterday. I still like it for a little bit of an area down here at 180, between 180 and 175. That's still $5 from where it's at, so there's still plenty in this. So let's keep that on our list. Sideways to down. All right. Let's move on to XOM. Here's ExxonMobil. I still like it. Why did I show it? Because this is what you get in corrective action days, the push-pull. And we've seen it a few times on this chart. I thought we did. Well, here's one. But it starts a little bit of a rally, which gets annoying, but it still went back down. So this is a rollover, I should say confirmation of a continuation of this move to the downside. It almost hit that 102. It looks like it's in the push mode. So pull down, push higher. We'll see. Anything above the 106 is something that I'm no longer going to be happy with to the bear side. Sideways to slightly down from here would be okay. I'm fine with that as well. So, but it's still on my list. It still looks pretty good. And it could be an advantage, a little bit more to the downside if these markets go sideways or correct, if energy falls out of favor. Interesting enough, right? Because BKR and LNG, both energy, but they're moving higher. This one's moving lower. That's the selectivity that I'm talking about, folks. It's very difficult to blanket sectors anymore. It's very more selective. This is GDX, brought to you by this class. Great work, folks. And it's been selling nice and slowly with a target of 30 that we had. It's actually hit this. So if you guys were in this when we started talking about it a couple of weeks ago, you might be pulling profits. Actually, it was the 17th of May we talked about this. So maybe back in this area as it started to break. The first time, it had a very anemic bounce, good crossover, hits that first target of 30. For you guys that want to continue with this, see if it can't bounce from here, hit the 31, roll back over, consolidate. But if it can confirm below that 30, it might be another entry point to extend down to 29, 28, dare I say 27. We'll see. With the talk of the Fed increasing interest rates, might really lean this to move things into the dollar and out of gold. And I think this one's just going to continue lower. All right. Couple more here. mRNA, this is Moderna. I always keep saying this one sneaks up on me, which it shouldn't because we look at it all the time. But it's in a beautiful area. Okay, as I'm zoomed out here, you guys can see that back in the end of early October, twice in October, it's had a floor here, and it looks like it's almost back to that area. So let's zoom in and kind of stretch this thing out. You can see that, hey, we got a good breakdown. Looks like it's confirming. I do like the subsequent candles before it. See how they're moving lower. There's a gap actually between this candle here on the 16th over the weekend and the holiday. It gapped down, traded down. It's gapped lower this morning. It's moving lower. So it's a little bit more of a bearish feel to it when it comes to momentum. More, not as much as this, but check this out. So this is a lot steeper because it's only 3 days. This is about 5 or 6 days. Reluctancy with tight ranges and shadows. This is more conviction and direction with smaller shadows, larger candles. That's what I mean by momentum. So it looks like it's pretty good. So break it down. I don't know. Snap a Fibbo on this. Do an extension target line for a target. That's Moderna. And then Disney. Disney just can't get out of its own way, it seems. But I do like a little bit of drama in a stock. I'm not a fundamental person, but it's nice to have it on your side, right? So all sorts of back and forth. You got Florida problems. You got bad movies that aren't really doing as well as they expected. The CEO left. or the CFO just took off, blah, blah, blah. Okay, enough of that. But I do like how it's approaching this level. If you want to be patient with this, wait for it to get there and maybe play it as it breaks. You can see back here at the end of the year last year that it was at that 85 level. Playing it right now, I'm totally fine with that. Just be mindful of this support level currently, this most recent here at the end of May, and know that sideways is your friend. Targeted butterflies, broken wing to the downside, stuff like that. All right. That does it for our picks. So we'll get back here. What are the markets doing before we get back? Okay. Well, Dow's moving higher. It's pretty much erased all of its losses. NASDAQ struggling and S&P struggling. It's corrective. It's still a pullback day. Okay. So let's get into the market analysis a little deeper, I should say, maybe for what we've seen so far. 2 days. It's interesting. We got coming out of a holiday. It is what it is. Diamonds, S&P, and Qs are all down though, considering the last couple of days. I truly think this did start Friday of last week. Expectations were for a pullback. That's exactly what we're getting. Boy, I can say that 1,000 times, right? Russell a little bit less. Oil, a little bit of a bounce, and then gold's down due to what I believe is expectations of a higher dollar moving forward. So let's get into the SPY chart. Here's our extension. I was a -1 at this point for the week and +2 for the month. Guess what I am right now? Just guess. You're right. -1 for the week. I'm having a beautiful pullback. +2 for the month. When this turns or hits a level and starts to turn, I will take my weekly to a +1. 0 first and then a +1, and I'm going to look to add bulls. That's right. Sometimes I let you guys guess before I tell you. Other times I just give it to you. Here's the diamonds. The exact same thing's going on. It's just a little closer to its support level. It seems to be already there. This would be a very comfortable place for this to pivot and turn higher if you're bullish, if these markets want to stay bullish. We've got a crossover back into the correct, or just about happening here. The first target's going to be that 345 and then on. So the diamonds look like they're about ready to pull back or pivot right where they're at, which could be the behavior that we're seeing in it. Keep in mind, folks, it's now positive. Here's the Qs. Qs got a little bit more to go. I really do want to see profit taking. Not a massive sell-off, not a market crash. I just want to see some deeper profit taking and seeing these markets, if they are bold enough to get out of all the darling stuff and truly believe into some of the stuff that could be good discounts as we roll further into 2023 and into 24. Right now, I just want the darlings. I just want to play the things that are blown up. I still don't have much faith. That's kind of what I feel in these markets with how they're moving. We are seeing selectivity in sectors, so we'll see if that can continue. But I think this is going to pull back. My outlook is still going to be pretty much the exact same as the SPY. So let's get into the economic reports, because this is where it gets a little interesting. I'm just not seeing the markets really react to any of these. Here's this building permit. The expectations was to be in line. It jumped up. Housing starts was a big one. This was huge. That's a massive, massive jump in housing. There is still a demand, and I don't know if it is 100% because nobody really wants to sell their house right now. It could be because of fear. Could be because they just want to stay put and they're happy. But there is still a huge demand for houses, which is why I think the starts are so high. Now, we got a whole lot of Fed speak going on. Let's get to our next slide, because what do we have left? We've got, there we go, unemployment claims and the manufacturing and services PMIs. It'd be nice to see these come in line, because that's kind of the slowdown you'd look for. But this, I want to see if it's going to be existing home sales, if it's going to be in line with what we're seeing in the permits, or if existing home sales come in line or lower because there's just no homes out there yet. So it's hard to gauge, because the demand can be super high even though there's nothing there. So unless we see existing homes sell, then we don't know what the demand is. But if there's no homes to sell, then that's kind of a hard one to read. But based on what I'm seeing in the previous numbers, yes, there is still some serious demand out there for housing. Okay, let's pull the class and see what you guys are thinking. I'm going to go ahead and start with the weekly direction first. Let's launch this. And as you'd expect, 47%, negative 133.013. You guys are right in line with me. Believing in the overextension, which, yeah, I totally get. All right, let's hide that. Let's go with monthly here. So how you guys have voted here is 29% plus 2, 36 plus 1. So we are definitely plus 1 plus 2 range, right? Excellent. Cool. All right, folks, thank you so much. And I am exactly with you. -1 for the week, and boy, I just love this. If this can move sideways, I'm going to move this to +1. If we get confirmation, I'm not saying it's going to happen here. It might happen further down. As soon as we get confirmation of the pivot, it goes to +1. I'm throwing on my bulls, something more diagonal, targeted butterflies for 1 week, 2 weeks at most. I'm not going to abandon my bears. I might move some more sideways stuff, things of that nature. If we start to break down and fall apart, nope, this stays where it's at. This starts to go back this way, and I look for more sideways to bear. Plain and simple, right? In theory. It's kind of hard to do on the fly if you're using emotions, which is why we don't use emotions. All right, let's get into our sector analysis, as it's not going to help us at all in corrective markets. Consumer defensive, energy, industrials, the strongest. What? How's that happening? Real estate, technology, consumer service, communication services, the weakest. Well, if you flip those upside down, it's an absolute corrective market. This is exactly what I want to see behavior-wise when it comes to the sectors. In this case, whatever was leading should be pulling back. Whatever was lagging should be leading. Now, when you take a look at the overall charts, now, folks, you could take a look at the XLP, which is also consumer staples. The IOAK was a little bit more representative of that 1% move from Wednesday to Wednesday. Let me see if I can't find the lines in here. Just simply because this is where it was before the weekend. So that's last Wednesday, Thursday, Friday, Tuesday, Wednesday. So you can see that from this close to this where it's at now, it's definitely up a 1%. Doesn't mean the XLP doesn't show that, it's just a little bit under. However, this is a bear rally, right? It's the leading sector for the week, and it is in an absolute bear rally. You got a bearish crossover. It did cross over the 20-day moving average. It's got this resistance of the 50-day moving average here. It's got resistance back here that we saw in April. This is a bear rally in the consumer staple sector. Now, the weakest sector is communication services. So let's take a look at it. Yeah, it looks really weak to me, doesn't it? This is parabolic, and it is in a bull pullback. So everything is leading to, yes, we're in a corrective action. The sectors are behaving as correcting-wise. All the charts are behaving correcting-wise. So guess what we're going to treat it as? It's correcting. If you want to be like Brett, sit out, wait for this correction to play itself out, and then jump in on the bull side, be my guest. If you're trying to do something to take advantage of sideways to down, or you want to get into something a little early for the up move, please diagonalize it. Please give it something sideways. Because if we're wrong and this continues lower, it hurts to try to guess when the markets are going to turn. You can get stung. Okay, so that's enough. The markets could be putting together a pullback this week. I always say could be. It looks like it already is. It's only 2 days, so I have to say could. Let's see how long the bulls can stay away. Sentiment is bullish and confident. I didn't change that from last week. There are still bulls out there, this is my opinion, that are itching to buy. I'm still seeing things come off pretty quickly. Some of the darlings aren't even going down, right? So let's see how long the bulls can stay sidelined and allow for this correction to happen. I don't want to say that the bears are waiting and they're going to jump in and sell, because I just don't think that sentiment is anywhere bearish at all. Last week, folks, I made a call. I said we are going to go up regardless of what the Fed says. Fed comes out a little bit more hawkish than they were, and the markets went up. This is a very strong sentiment, very strong bullish outlook, and these markets are just got to stay out of the way. If you're bearish, just stay out of the way. Initial jobless claims, existing home sales, leading indicators all this week. Slowing PMIs, but still no slowing in housing market for now. I don't know what the Fed sees in there, but I know that there's just a lot of demand still in different areas. Is the recession past? Gosh, that'd be cool. I hope so. My opinion is that I think prices need to come down, um, and maybe activity from the consumer. Past that, I'm good. I don't think we need to have a devastating job markets crash and any of that stuff. All right, there's my 2 cents. I'm done chatting. Let's go out and share, see what you guys are looking at. Yeah, a little bit of a move to the upside. But what is the Dow? It's primarily energy materials. This one should stay down if we're taking some profits or just not buying anything. And then this one should go sideways. Yep, L corrective. There's still stuff going on here. So it's having a really bad day, but if you look at its chart, it's silly. UNH is still active to the upside. Nvidia is having a little bit of a break, but they're not falling apart. All the stuff that's been weak, energy, utilities, basic materials, is green. Yep. All signs point to correction. Okay, let's get to some of your trades here. I've got to stretch this out. Let's start with Moderna. I know that we just talked about it, but I want to talk about your trades. A couple of you out there with this one. 126, 122 bear put spread. I'm going to go ahead and get this good looking here for us. And this is Justin's 126, 122. Right where it's at, 122, 126 bear put spread. Looks awesome. It expires this week. Is that correct? Sweet trade, man. Sweet trade. Love it. It's only got a couple of days. I'm hoping it's down here by expiration. Sweet trade, John. That was John's trade. Justin has one as well, or I believe, but since we're here, I'm going to skip over and talk about it. I'm watching Moderna for a potential long call due to the crypto surge. Oh, MARA. See, I got to squint. I'm like, crypto, Moderna, what are you talking about? Well, if somebody would put on their glasses, then maybe I wouldn't typo all the time. Thanks, John. I do like the Moderna trade. Great work. Moving on to Justin. Let's take a look at this thing. Call due to the crypto surge. Possible quick in and out trade if it continues the move higher. As of now, it's pulling back. Woo-wee. That is nuts. Look at that thing. Yep. Wait for this kind of fizzle itself out. Nice, beautiful sideways trade until it's not a sideways trade. But this thing looks like it was really, really waiting for something. Yeah. Keep it on your list. Let it calm down. This one is just a guess. You imagine how long you were in this long and then boom, today or yesterday's the day that it happens. Yeah, keep an eye on that. Let it calm down. Maybe establish some sort of support level. But yeah. Thanks, Justin. I exited a lot of trades the last few trading sessions. Oh yeah, Brett says he's just going to sit back and let the correction happen. Once again, Darren is a really good trader. He's got a lot of good patience. A lot of traders out there that will sit and wait and be patient. EL looking at a put butterfly with a one central zone of 185. Let me zoom in on this. I haven't seen a stay louder in a while. Look at that move that it had off the bottom. Remember we were talking about that last week, that last blow off top, and I just saw so much surging. We were well overdue for some sort of corrective action, or at least a slowdown. The bulls just got to get tired at some point. 190, 185, 180. I like it. Playing the exhaustion, a little bit of a pullback. It is below the moving averages. Didn't quite get here, but it did confirm a pivot. Totally fine with that one. Let's write it down. I haven't written down very many of these because a lot of them are just continuations. So if you don't have a big list today, folks, make sure you keep checking our old list. That's why we do this class each week. The date today is what? Is it the 21st? Yeah, it is. All right. Okay. Yeah. Thanks, Dan. Moving on. OKTA. Looking possible interesting. It can help reduce some long delta in tech. If anyone is too bullish tech, here's one that we could kind of use. Short-term put, diagonal spread, 72.66. Yep, okay. Not really doing well. You could look deeper into why. I don't know, but a few, there are some out there that aren't doing so hot. So yes, I like it. What strikes you here? 72.66. Okay, okay. Playing kind of where it's at. Let's see if that's 70. 72 is probably right. A little bit less than half. And 66 is just above 65. Can we call that that? Okay. Yeah, I'll get behind that. Last few days, this thing is definitely falling out of favor. Like to see where the volume finishes on the day like today. What's difficult about something that's moved 5%, the volatility is going to be high. The options could be expensive. You could hedge that out with like a vertical spread if you want to do something shorter term. Or what Justin's saying, something like a diagonal. Sell something. You could sell something a little closer if you'd like. I guess that might be the closest. I'm not sure where the strikes are. Just to reduce that cost on a day like today. Or you could just wait for the day to end and see if this is going to continue. And then put it on later. At that point, it could gap down. Who knows? But definitely something to look at. Let me go ahead and write it down as a bear. Thanks, Justin. OKTA. Yeah, every time I say pivot, Brett laughs out loud because of the Friends episode when they're trying to carry the couch up the stairs. Pivot! 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 I don't know if you guys seen it. It's really funny. Okay. Always go back through the classes and take a look at the older ones because I love to carry these trades forward over and over week to week to week. So we always have new stuff to look at, but we're not abandoning anything that could be good in the past. Thanks, guys, for joining me. Appreciate it. Thanks for all your participation as always, and we're going to talk to you guys next time. Bye, folks.